Imagine waking up, pouring your morning coffee, just casually checking your mail, and discovering that a paid-off, vacant plot of land you've owned for years was just sold to a complete stranger.
Yeah, and you had absolutely nothing to do with it.
Exactly. I mean, your name was forged, the deed was recorded, and the dirt is just gone.
Aye.
Or picture an even more devastating scenario. You're getting ready to close on your absolute dream home, right?
Uh-huh. The absolute worst case.
Right. You wire $500,000, literally your life savings, to your title company, only to find out a few hours later that the email providing the instructions was spoofed. The money didn't go to the title company, it went to an offshore account, and it is gone forever.
It's just a terrifying reality to face. And unfortunately, looking at the data, it's a reality currently happening to thousands of people. The systems we rely on to establish ownership are, well, they're being turned against us.
Yeah, we are looking at a landscape where the fundamental safety of property ownership is just under siege. So today, our deep dive is focused entirely on the exploding threats of seller impersonation fraud and real estate wire fraud.
Right. And we're pulling from a massive stack of recent intelligence to map this out for you.
We've got the latest data from the FBI's Internet Crime Complaint Center, consumer guides from the National Association of Realtors, the updated American Land Title Association best practices, and a recent federal court case regarding bank liability that is going to completely change how you view your bank's role in all of this.
The goal here is to dissect exactly how these highly sophisticated criminal networks operate. I mean, we are seeing everything from the deployment of AI deepfakes to incredibly corrupted document traps.
We really need to break down the mechanics of these scams so you have the specific tools to protect your property and your future. So the payouts in real estate are just too massive to ignore. Let's start with the dirt itself. Let's look at this concept of seller impersonation fraud.
Yeah, otherwise known as deed theft.
Right. Who are these scammers actually targeting? I mean, they aren't just picking houses at random, right?
No, not at all. This is a highly targeted operation. Fraudsters are combing through public property records looking for very specific profiles. Their ideal targets are vacant plots of land, rental properties, or homes that do not currently have a mortgage.
Oh, that makes sense. Because if you don't live on the property, or if there's no bank keeping an eye on the title, you aren't going to notice suspicious activity.
Exactly. There is literally no one there to raise an alarm until it's way too late.
It's like someone selling your parked car while you're asleep just by printing a fake registration. And, the scale of this is staggering. The FBI numbers for 2025 alone show online real estate fraud climbed to $275 million in losses.
Yeah, from over 12,300 victims. And to pull off scams at that scale, criminal organizations typically operate in 3 distinct phases.
Okay, break this down.
So phase 1 is the impersonation itself. The criminals pull your info from data brokers, or, the dark web, to create incredibly convincing fake IDs. They also set up voice-over IP phone numbers to pose as the legitimate landowner.
Wait, just to clarify on that last point, why use voice-over IP? Is that just to avoid being traced?
That's part of it, yeah. But the main advantage is spoofing. A criminal operating out of a cafe halfway across the world can use a VoIP service to get the exact local area code of the property they are trying to steal.
Oh, wow. So it creates a false sense of geographic proximity.
Exactly. Then they move to phase 2, which involves tricking the real estate professionals. The scammer contacts a local agent, poses as the out-of-town owner, and signs contracts. They'll even fabricate a fictitious deed just to make their illusion bulletproof.
And if they successfully get a buyer to closing...
Then phase 3 is the payday. The funds are routed to an out-of-state attorney or a shell LLC, which is really just a front. Once the money hits that account, it is immediately scattered globally.
To understand how convincing this illusion is, you just have to look at this anecdote from a real estate guide. An agent describes going through the standard vetting process and listing a piece of vacant land. 7 hours later, she gets a frantic call from the actual owner.
Oh, I read that. It's wild.
Right. The real owner says, "I'm being duped. Take the listing down. This is the 3rd time it's happened on this property."
It is a relentless assault. I mean, if a property fits the target profile, multiple syndicates might try to steal it simultaneously.
But this raises a massive question for me. How are they actually getting these fake sales officially recorded at the county level without anyone noticing? Don't the county recorders verify this stuff?
That is a super common assumption,
Yeah.
but it fundamentally misunderstands how our civic infrastructure works. The reality is, the U.S. relies on an open recording system.
What does that actually mean in practice?
Well, looking at a recent local government warning from Illinois, It perfectly illustrates the vulnerability. In an open recording system, absolutely no authorization is needed to file against a property.
Wait, anyone with a stamp and an envelope can just file a document against my house?
Anyone. The county recorder's job is purely administrative. By law, they just record documents that meet the formatting requirements. Margins, paper size, notary stamps. They are not detectives.
So it's like a library that accepts any book you drop in the return slot without ever checking if you're actually the author. The county is just filing the paperwork. They aren't fact-checking it.
That is an excellent way to think about it. And, this open system was designed centuries ago to keep commerce moving smoothly. If a clerk had to investigate every single deed, land sales would grind to a halt. It was designed for a high-trust society.
But today, in a low-trust, highly digitized world, that open system makes it incredibly easy for scammers to file forged deeds.
Right, especially if the true owner isn't actively monitoring the records.
So if the county recording system is just a library Dropbox, the responsibility falls completely on the real estate professionals and the buyers to spot the deception.
Yeah, the defense has to happen before the ink dries.
So what should people look for? Industry guides lay out some major behavioral red flags. First, the seller refuses to meet in person and communicates strictly by text or email. They always have a convenient excuse, like an illness or unexpected travel abroad.
Right, or they insist on a rushed closing.
Yeah, or they offer the property for 50% below market value just to get the cash fast, and they insist on using their own unknown remote notary.
Those are the classic signs. But what's truly alarming is the technological leap these networks have made. The behavioral red flags are getting harder to spot because the digital disguises are just so good. We're seeing a 3,000% increase in the use of deepfakes recently.
A 3,000% increase.
Yeah. Scammers are using generative AI to create synthetic faces,
Right.
people who do not actually exist, and putting those faces onto stolen driver's license templates. And when agents insist on a live video verification call, the criminals are ready.
Wait, how do they fake a live video call?
They use third-party webcam plugins to overlay a deepfake mask onto their actual face in real time.
Well, there is actually a brilliant, completely low-tech defense against this. It's called the phantom shed test.
Oh, I love this strategy. It is a masterful piece of reverse social engineering.
So imagine you are an agent walking a vacant property. You get the remote seller on the phone, and you say, hey, the property lines look great, but what do you want me to do about this old, dilapidated shed sitting on the back corner?
And the beauty of the test is there is no shed.
There is no shed. If the person says, oh, just tear it down or leave it as is, you instantly know they are a scammer. They've never set foot on the property.
But if they get confused and say, wait, what shed? There's no shed on my land, then you know you are likely talking to the actual owner.
Exactly. You are testing their physical knowledge of the dirt they claim to own.
It is a highly effective filter. But I want to add one more critical technological defense here. If you are going to do a video verification with a remote seller, never, under any circumstances, click a Zoom or video link provided by them.
Is that mostly a malware risk?
It is a malware risk, yes. But more importantly, they use their own custom video links to route the feed through their deepfake software. You must send your link hosted on a platform you control. It breaks their ability to use those real-time AI overlays. The mask literally slips.
Send your own link. Ask about the phantom shed. Test their reality. Before we transition from how scammers steal the physical property to how they steal the money, we have a brief update for you. If you enjoy content like this, please take a moment to like, subscribe, follow, and turn on notifications so you'll always know when new content is released.
And here is that quick show update.
As a quick update, we continue to monitor the Martin Stevens v. OpenAI matter. It is important to note that this is still not a lawsuit. Martin Stevens has suspended his voluntary quiet period after OpenAI filed its confidential S-1 registration statement on June 8, 2026, without first engaging with him, despite having nearly a month since his final notice and more than a year since his initial notifications. Stevens views OpenAI's decision to proceed without any direct interaction as a sign of extreme disrespect. As a result, he has stated that he will not re-enter a quiet period unless it is part of formal agreement. At the time of this recording, no settlement discussions or negotiations have been publicly confirmed. We can also report that the dead man's switch has not been activated, meaning Martin Stevens remains safe from both a physical and legal standpoint. We will provide updates if circumstances change.
Okay, so, the phantom shed test protect the dirt. But what if the seller is completely legitimate? What if the deed is perfect?
Right. Is the transaction safe then? Because it seems like the money can still vanish into thin air at the very last second. we really need to talk about real estate wire fraud.
This is where the financial damage becomes truly catastrophic.
Yeah.
Business email compromise resulted in $2.9 billion lost across all industries recently. And real estate is the ultimate target because a single transaction moves hundreds of thousands of dollars.
And the scammers know exactly how to get into the middle of that wire. The intelligence sources detail a specific phishing scheme that is incredibly sneaky, the corrupted Word document trap.
Oh, this one is brilliant in a terrible way.
Yeah, hackers send an email to a real estate professional or a buyer themed around something stressful, like an end-of-year bonus or a critical tax document. Attached to it is a Word document, but the hackers have intentionally slightly corrupted the file code.
And that slight corruption is the masterstroke. Because the file's architecture is technically broken, standard corporate email security tools literally cannot scan the contents to detect the malware hidden inside.
So it slips right past the digital bouncers. You open the attachment, and Microsoft Word pops up saying, "This file is corrupted. Do you want to repair it?"
And it's human nature to click yes to fix the broken document.
Exactly. But the moment you click yes, Word repairs the file, opens it, and inside is a giant QR code.
This is the psychological brilliance of the attack. They need to move you from your protected corporate computer to your unprotected personal mobile phone. By presenting a QR code, they force you to scan it, taking you completely outside the secure IT umbrella.
You scan it, and it takes you to a fake login page. You type in your username and password, and they harvest them. But wait, what about multi-factor authentication? Doesn't the system text you a code to prevent exactly this?
It does. They have a workaround.
Yeah.
Think of multi-factor authentication like a bouncer at a club checking your ID. Once approved, you get a hand stamp so you can walk in and out freely. In the digital world, that hand stamp is called a session token.
Okay, so how do they steal the stamp?
When you log into that fake portal on your phone, you are actually passing your credentials through a proxy server controlled by the hackers. You receive the text code, you type it in, and the real system grants access. But the hackers are sitting in the middle. They aren't just stealing your password. They are capturing the hand stamp, the session token, the system just generated.
Once they have that token, they bypass your MFA entirely. They log into your email, and they just sit there silently reading your messages, waiting for the exact moment the title company sends the wiring instructions.
Yep. Then they intercept the email, swap out the title company's bank account number for their own offshore account number, and hit send to the home buyer.
And the home buyer wires their life savings directly to a criminal syndicate. Hold on. That makes zero sense. If my intended recipient is Main Street Title Company and the hacker's account name says John Doe, the bank's computers should instantly red flag that the names don't match. Why wouldn't the bank just stop the wire?
You would think so. It seems like the most basic level of common sense. But this is where we have to face a very harsh legal reality regarding the banking system. We need to look at a recent federal case title, Inc. v. U.S. Bancorp.
What happened in that case?
A title company wired funds to a scammer's account. The funds were drained. The title company sued the bank, arguing exactly what you just said, that the bank should have refused the wire because the name didn't match the account number.
And the court threw it out.
Entirely dismissed. Under Article 4A of the Uniform Commercial Code, which governs financial transactions in the U.S., banks have absolutely no legal duty to check if the account name and the account number match.
No duty at all.
None. The system relies entirely on account numbers to keep millions of transactions moving every hour. If the account number is valid, the bank is free to process the wire. The courts ruled that the person transmitting the funds, the sender, has the last and best clear chance to prevent the fraud.
The last and best clear chance. So the liability falls entirely on the sender. Even if I'm tricked by a highly sophisticated hacking syndicate, the bank is completely off the hook.
It is brutal, but it highlights why prevention is your only viable strategy. Once the money is sent, it is gone.
So since the legal burden falls squarely on us and the county recorders aren't going to stop fake deeds, what actionable steps can you take today to build a defense?
Let's start with wire fraud. The absolute necessity here is callback verification. Never, under any circumstances, use the phone number provided in an emailed wire instruction.
Because if you call the number in the spoofed email, you are just calling the hacker's burner phone, and they'll gladly verify the fake instructions.
Precisely. You must call a known, independently verified number. Look it up on their official website. Also, industry best practices now mandate that title companies stop emailing wire instructions altogether. They use secure communication portals instead.
So you log into a secure website to view the instructions, bypassing the email threat completely. What about protecting your property title?
There are new policy endorsements for post-policy forgery protection. Standard title insurance only looks backward at the history of the house. But this new endorsement covers you if a forgery happens tomorrow.
Which is huge, considering average legal claims to fix a clouded title cost over $143,000. But what if I just want to monitor my county records right now?
You absolutely should. Many counties offer free property fraud alerts. You register your name, and if any document is recorded, you get an instant text. But there's a vital warning here. Ignore scam mailers that try to charge you $200 a year for this. Your local government usually provides it for free.
So your action items are clear. Lock down your current title with free county alerts, verify LLC naming conventions to the exact letter, and if you are ever wiring money, trust absolutely no one until you've verified the instructions over a live phone call to a number you looked up yourself.
Knowledge and verification are your only true shields. The digital systems designed to make transactions fast have unfortunately stripped away the friction that used to keep us safe.
It's fascinating, really. You step back and look at this. Exchanging land is a transaction as old as humanity itself, and yet it has become this bleeding-edge, high-tech battleground.
It really has.
As generative AI gets to the point where it can perfectly replicate a person's voice and face on a video call, and with our public records exposing all our data, are we moving toward a future where the only way to safely buy real estate will be to physically sit in a room passing papers across a mahogany table, just like we did a century ago?
Yeah, have our digital advancements actually forced us to revert to analog trust?
Something to think about.
Definitely.
If you found this episode valuable, please like, subscribe, share, follow, and turn on notifications. It helps us continue bringing you content like this and ensures you never miss future releases.